Hello, everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and I'm excited today to be giving you guys the stocks to watch or stocks to buy in January 2018 and beyond. Last month, stocks picks were amazing. CenturyLink, AT&T, Verizon, Comcast, they all did great in December. CenturyLink was one of my ones I had held. I believe it won for the month over 14-15% in my portfolio. It did recover quite a bit from what I had lost, but it was a great pick if you guys had added it to your portfolio, along with AT&T and Verizon and Comcast. They all did really well this month. So January 2018 and beyond, I will be talking about a few companies pertaining to blockchain technology. And as a dividend investor, I will be focused on dividend paying stocks. So I will be covering a few here. I did post on my Facebook page. If you guys follow my Facebook page, I talked a little bit about, I'll be looking at Walmart, IBM, and I posted a few articles. I've also deep dived into this a little bit more. I enjoy technology. That's my field. I'm an engineer. So I'm looking at ways that how technology will work right now and in the future. I invest very heavily in technology. If you look at my stock picks, I do all sorts of technology. I have 3 telecom. I have like 5 or 6 different tech companies. So I'm very involved in technology. And going forward in 2018, I believe blockchain will be huge. Just look at 2017. Many companies have begun to take advantage of blockchain. Cryptocurrencies has jumped into the media attention. So we're going to be starting off this video by talking about what is blockchain and what companies will be using blockchain. So first of all, blockchain, it was introduced back in '08 as the basis for cryptocurrency such as Bitcoin, but it became much more, and eventually blockchain is starting to become the backbone of the new type of the internet for the future. And the main principle behind blockchain is it's a digital cloud database that offers transparency. It also uses computer logic to make operations automated and computer fast. So if it's all kept on the cloud, there's no physical form of this thing. That means that if you order a product, a service, it is stored. This information is stored in the actual computer code, and when that item is delivered, the payments is made, the system automatically recognizes everything for you and recognizes the transaction and changes the ownership's rights for you. It's very fast, very quick, and it's people or companies are going to be moving to this technology because it's a way to be very secure. Blockchain itself, cryptocurrencies, they're said to be unhackable. So a couple financial stocks we're going to be covering is GS, ticker symbol GS. It's Goldman Sachs, and JPM is the ticker symbol for JP Morgan, or Chase as many people would call them. So both of these companies have been looking, they've been calling Bitcoin itself fraud, but the actual technology behind blockchain is what they're looking to incorporate into their businesses. So JP Morgan has poured an enormous amount of resources into blockchain research and have actually partnered up with Digital Asset Holdings. A few of the cryptocurrencies pertaining to the financial sector would be Ripple, and it is a digital asset that uses XRP. And while Ripple doesn't rely on Bitcoin, it does uses again its own digital asset, which is called XRP. I'm not going to be deep diving into XRP or Ripple because I believe a lot of other, I may make that into a whole nother video. I believe that Ripple will be one of the stronger ones in the future. I'm looking at Bitcoin to Napster and Kazaa as as an early player. Bitcoin's 2008. There's much better technologies coming out here. Ripple. What's Ripple primarily used for? Ripple itself is for customers with settlements. It can take 3 to 4 seconds, and it's a two-way messaging system that can see the account number matches and the intended recipient, and then it sends the messages back and forth. And then when the payment is arrived at the destination, the information drives down. It sends a notification to both sides, and then this whole system, it just drives down the error rates and issues that could take place when sending transactions. It's also lightning speed when getting involved in banking. So a lot of these banking companies will begin to, you know, invest and use blockchain for their financial systems. A couple companies will be Microsoft. They do their Azure cloud. Microsoft has already created a special team to conduct blockchain research and support collaboration. Additionally, Microsoft does offer a blockchain as a service, and it's a solution to help corporations build their own systems on the basis of Microsoft's Azure cloud service. So again, this is a cloud database up, and it's using lightning speed, super fast, super reliable, and so those are the 5 stocks. We have Goldman Sachs, JP Morgan, Microsoft, IBM, and Intel. So really quickly, we're going to be taking a look. This is IBM's website here. They're already talking a little bit about blockchain solutions and technology. I left that up here for a while, so you guys could probably scan it over while I was just kind of chatting away. This was another article that I had posted on my Facebook that talks about how IBM and Stellar are launching their own blockchain technology banking across multiple countries. Walmart is doing some little, they're using blockchain over in China to verify and their items, their products, what's in storage, what's not in storage, what was purchased. All this is done very lightning fast. And this article kind of goes on to cover a couple banking sectors such as Stellar, IBM, and kind of goes into ways that we could replace it, BitPizza, which relies on Bitcoin network to replace traditional wire transfer. So, they're already starting to make the move across from, using blockchain and Bitcoin as a way of verifying and such. So this is another good article here. This is good stock invest. I was taking a look through this one. This kind of covers a lot of what I had talked about, what blockchain is. It also goes in to talk a little bit about Microsoft, IBM, and Intel, as they have all made significant progress into the blockchain adoption and development. And kind of like, Microsoft, again, this talks a little bit about their Microsoft Azure cloud service. Intel, they begin starting to kind of get involved in blockchain, and talks a little bit about how they're planning to use it towards their Linux system and such, and their IBM cloud service, and kind of offer different services off of that for other users to get involved in that way. And then Intel, they're starting to kind of take on their own strategy on how to enter the blockchain technology. I think they're a little bit behind IBM. I believe Microsoft was the first one, IBM, and then Intel coming in there. About 3 tech companies beginning to take advantage of blockchain. Now, there isn't a lot of information out there whether Apple or Google are beginning to take advantage of this, but I believe that if they did, it would benefit them all, just in regards to safety. It's more secure. A couple other articles. I'll have all of these in the description below. I had taken on read through them, but I'm not going to be covering them all because that'll make the video incredibly long, and I would rather just kind of cover the 5 stocks themselves if they are great stocks to buy in 2015. So what did I click on? Oh, the Barons. So we're going to go ahead and punch in these tickers and take a look at whether their stock is good at this current time for January, or if we could wait a little bit. So the first ticker was Goldman Sachs. Then we have JPM, which is JP Morgan, followed right behind by Microsoft, IBM, and Intel. Now, I already own Microsoft and not that one. What is that? Intel. So I will primarily be taking a look at whether to add IBM, Goldman Sachs, or JP Morgan. I don't have any financial companies currently in my portfolio. I did sell off my New York Community Bank Corp. So let's go ahead and begin with Goldman Sachs. Now, first thing I like to take a look at is the price to yield ratio, and take a look at the price, how it's jumped in the last year in comparison to its yield. And you can see, for the most part, during 2017, it was doing the teacup method, where it had fallen down into the $215 range, $210 range. That's still quite high for new investors. So if you are looking to get involved in the financial sector that's taking advantage of blockchain, you may look into an ETF that has these. But as of right around like prior to October, I remember there was an article that talked about how Goldman Sachs had, they were calling Bitcoin fraud, but also released right around this time frame that they're going to get involved in cryptocurrencies, and then this stock kind of jumping up pretty crazy. So I don't know if that growth is pertaining to that whole discussion, but you can see here that the yield is right around 1.14, whereas in the past, through April through October, it was hovering in the 1.25s, 1.30. So it is down quite a bit, and the stock could continue to rise in the future, but at this current time, it may not look like a good opportunity to buy. Now, looking at its revenue, free cash flow, and net income, those are all good stats to look at here. I like to look at the 5-year and then look at them percentage wise. So, as far as revenue goes, they are down 5.13% for the over 5 years. The net income is down 1.03, and their free cash flow is down by more than 197%. So, not an amazing if you're a dividend investor, I would definitely want to take a look at their dividend payout ratio and how long they've paid dividends, how long they've continued to have dividend growth, what's their dividend growth look like. Now, let's take a look at their price to book and price to earnings. We can see their price to book value is actually really nice. 1-for-1 ratio would mean that you're buying their price at their current book value of the company. So this is actually right around even. And if we look at it for the long term, it normally stays at right around this area, whereas their PE ratio, say for the last couple years, has hovered right around. Let's take a look at 5 years. That takes a little bit better. So you can see here that the PE ratio for Goldman Sachs hovers maybe between 10, 11 or so, but into 2016, 2017, it had jumped up high, which means that their earnings may not have been great in comparison to their price, but now that their earnings have begun to get better, their PE ratio has begun to kind of drop back down to the norm. So it is a little bit elevated in comparison to the past, but it could still be considered a good one to look at in the future. Now, next is JP Morgan. Now, this is a lot of them know this company as Chase. Now, again, I like to take a look at its 5-year just really quickly. Look at the dividend yield and the price. We can see it again. This stock, man, started in January, just took off. For the most part, prior to January 2017, this stock was trading right down in the $55 to $67 range. January 1st, that company took off, and it's now over $106. So just about increased by more than 100% in the last year. Now, let's see. So at this time, I would consider this one a bit overpriced. Let's take a look at the revenue, free cash flow, and net income for the last 5 years, and let's go look at percentage-wise, because this shows like they're in billions, obviously, but I'd like to take a look at how they're moving. So net income is up 16.2%. Their free cash flow is down 8.8%, and their revenue is up 1.87. So not too bad for a financial company. Their free cash flow, it does waver up and down. That's to be expected, but it's not as bad as, say, Goldman Sachs. So let's go remove JP Morgan. Free cash flow down 197%. This is much nicer number. And if we look at it over the 10-year here, we can see that net income is up 341%, the revenue is up 46%, and their net income, or their free cash flow, it stays right around the same. So they may be doing some acquisitions, buying up little things. I would probably want to look where their free cash flow is going. Next, we want to take a look at their price to book value, their PE ratio over the, let's say, 5 years. Change it back to numerical. Again, JP Morgan, or their price to book value stays a little over 1. Let's see here. For the most part, they trade around, say, I would say this is maybe 1.5 right here. This bar right here. So they're at 1.59. So they trade a little bit below the bar. So I would say 1.4, 1.3 is where they're normally at. And you can see January 2017, they've had a steady increase there, up from where they had been in the past. Their price to book value right now is let's see, I don't know where the average point would be. Maybe 11.25 I would consider right around the average. So I would say that currently their price to book value, or price to earnings, is a bit high, and forward price to earnings, let's go ahead and knock it down to 1 year and make sure I'm looking at PE and PE. So their forward PE is the orange and it's expected to go up, whereas that would mean that their price in comparison to their earnings may be coming down, which would cause their PE ratio to increase in comparison to their price. So that is JP Morgan. Next we have Microsoft. Again, take a look at the price and yield, and that's 5-year, that's correct, and I'm looking at that information. So Microsoft took off. This stock has been continuing to take off. There was a time back in 2016 I purchased this stock, I believe back in August timeframe or July timeframe, when I saw that the yield was exceeding the current price for the year. So I dove into the stock, and it's been doing really well. We can see for the 5-year, it is on its way up. So at this current time, I would say it's a bit overpriced. If you'd like, you could probably average in here and there, wait for dips. Taking a look at their revenue, free cash flow, and net income for the last 5 years. Taking a look at it percentage-wise, this stock is up free cash flow 31.43%. Their revenue is up 20.79%, and their net income is down around 3.01%. If we look at over 10 years, they're up free cash flow 75.26, 55.64, and their net income is up 19.93. Price to book value and PE ratio, go back to regular numbers here. We can see here for Microsoft, they're currently trading at around a 29 PE, which is pretty high. If you had bought this stock, it looks like the average could be sitting right around 15. So the stock, as of end of 2015, the stock has jumped up quite a bit in their PE ratio, so price in comparison to their earnings, whereas their price to book value is currently sitting at 7.3. Back in 2016, they were right around a 5, so not too bad there. Their forward PE ratio, let's take a look in comparison to their current PE. So they're currently at 29. Their forward PE is expected at 25.21. So their price in comparison to their earnings are expected to earnings are expected to increase at their current price level, which would drive the PE ratio down. So Microsoft, great pick there. IBM, let's take a look at again for the 5 years. So IBM's been down in the dumps this year. I believe it's down around 15% year to date. And we can actually look that number up a little bit better here over at CNN Market. If we type in IBM and we look at year to date, actually they're only down 7.57%. So a little bit different than what I had said, almost double. So anyways, you can see here that as far as their dividend goes for the last 5 years, this is at one of the highest points it's been since back in 2016. Looks like maybe January timeframe. It was up around this time, right around this yield before, and the price was down in maybe the 120s, 125s area. So this stock could be at a good opportunity to buy. It would definitely need to, you would definitely need to do some more research. What's going on with this company that's caused this company to kind of drop off by more than 7% this year? Now, taking a look at its revenue, free cash flow, and net income for the last 5 years, taking a look at it percentage-wise, we can see that their revenue is down 23%, their free cash flow is down 25%, and their net income is down 28%. So looking at these numbers alone, hold on. Okay, so going back. Looking at these numbers alone, I would definitely want to know what is going on with IBM that's driving their revenue, their free cash flow, their net income down so much over the last 5 years, where we've been actually in a very nice growth period in the United States. What's been going on with their sales? What kind of services are they doing? Products that they've released, things that they're kind of done for their company to have driven them down this far in comparison to the last ones that we've covered. So that's kind of an interesting thing to look at here. That's probably why they are down more than 7% this year and have continued to kind of fall down over the last couple years. Now, taking a look at their price to book value and their PE ratio, and taking it back to the number here, we can see that their current price to book is 7.23, which is actually, for a tech company, there are probably better ones out there, but you can see that its price to book value has came down hard in comparison to where it was back in 2015. This is actually one of the lowest points in, say, the last 8 years almost. You can see here, let's go ahead and just hit the max and take a look at, well, that won't work. IBM's been around since what, 1979, somewhere back there, maybe before. Let's see here. So I don't know what's wrong with my throat. Okay, so their price to earnings ratio is currently sitting at 12.83. If we can see here for the last 10 years, I would consider it maybe about average or below. We can see that it did dip back in January 2016, right below maybe the 9.0. So over the last 5 years, there's probably been something kind of going on with this company. I would definitely want to investigate more into this company as to what they're really doing prior to investing. I would want to do a secondary, third dive into getting to know what is going on with this company that has driven it down over the last couple years. Now, their current PE ratio is 12.83. Their future PE ratio is expected to be about 11.13, which would mean that they're currently they're expecting to generate more earnings, which would cause their PE ratio to fall by a bit there. So, yeah, definitely want to take a look at IBM. That would be one I would definitely want to screen a lot deeper to see what is driving them down. What do they have in the books to kind of bump them up? That's something you want to do with all companies, but definitely want to do a deep dive into that. Now, Intel is the last one here. Taking a look at it over the last 5 years, this one has been doing very nicely. It looks like 2017 was a great year for Intel and Intel holders. Its yield, which would averagely be around maybe 3.0, is currently sitting at a 2.33. So this one is definitely overvalued for its current sitting. We can see that for the year 2017, it had been primarily undervalued for the year. You would get yields of over 3% back around July, August timeframe. I saw this one as a good buying opportunity right around that time, and I've continued to hold on to it. It's just terrible that I didn't put more into it. So, I'm considered adding Intel. I want to add more equity into Intel. It's just hard to add it unless there's these dips again that happen. So I will probably be looking at a $43, $42 entry point if I do. Anyways, kind of going back to the video, definitely a bit overpriced, but if you're looking at it in the future perspective, look at all these stocks for the future, not where they're at. Do you think they will jump up in the future? Then it's definitely worth an investment at this point. If you are just buying it to buy and hold for the short term, then it may not be a good investment. But if you're buying and hold for 5, 10, 15, 30 years, then this company will, the companies that you're looking to purchase, they'll more than likely, as long as you do your research, will be increasing over the long term. Now, taking a look at their revenue, free cash flow, and net income for the last 5 years, percentage-wise, we can see that this company's free cash flow is up 67.28%, their revenue is up 16.39%, and their net income is down 6.26%. So good stats overall. And for the last 10 years, they're up revenue 61%, free cash flow 54%, and net income 47%. Price to book value is sitting at 3.04. So as value investors, they're looking for value stocks underneath 3 here. So stocks that would be a value buy would be Intel, JPM, and Goldman Sachs, if you're looking at it as a value investor. Going back to Intel here and taking a look at their price to earnings ratio, and for the year, we'll see that their price to earnings ratio is currently sitting at 68.14. So it's definitely been kind of creeping up over the last couple months, since around October, July, August area. From then on, it's been kind of creeping up. Its forward PE ratio is expected to be at a 14.19. So that's a pretty nice little leap there. I don't know how it would look like. Yeah, that's a terrible mess. So those are the 5 stocks I am looking at for January 2018 and beyond. These are all pertaining to blockchain in one way or another. So look at how each of their stocks are getting involved in blockchain. What are they beginning to use blockchain for? Will these companies be turning it around, such as IBM, that have done? They've had a rough year during 2017. Blockchain itself is here to stay. The technology, it's kind of the way of the future, and the way I see it. So I don't know if it'll affect these companies, their revenue, their net income, and such. But maybe some of them can take advantage of some of the technology, and as a banking, as a financial institution, Ripple itself looks like a great cryptocurrency, especially dealing in the financial sector. So that is it for this video. If you liked my stock picks, go ahead and hit the like button below, and let me know in the comments below if there is some other stock picks that you guys are looking at and pertaining to blockchain technology. What are you watching for January and beyond? If you have any questions about anything that was covered today, go ahead and let me know in the comments below. I want to thank everyone for watching up until this point. If you did like the video, again, hit the like button below. Please remember to subscribe for future financial videos. And again, thank you for tuning in, and I will see you next time. Have a great day. Bye-bye.